Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy and I'm a dividend investor.
One of us?
If you also call yourself a dividend investor, then you're in the right place.
How can you be so sure?
Every Friday, right here on my channel, I take pride in providing my subscribers with a weekly list of super high quality, market outperforming dividend stocks. See, I believe that focusing on stocks with impressive dividend streaks, amazing dividend growth rates, and sustainable payout ratios lead to fantastic total returns, which in turn lead to more money in your brokerage account.
Well, the math checks out.
If you happen to also be a fan of bigger account balances and are looking for a place where you can find stocks to help you get there, make sure you subscribe to the channel and leave a like on this video to tell me I'm doing a good job. But now let's go ahead and dive into the first stock on this week's list, Jacobs Solutions, stock ticker J. Today marks the very first time I'm bringing this stock to you guys here on the channel, and I'm excited to bring you the numbers behind this stock, so let's check them out. Jacobs Solutions is a quarterly payer in the industrial sector, paying $1.16 per share per year with a forward dividend yield of 0.84%. Jacobs Solutions has been paying and growing their dividend over the past 6 years. They have a 3-year dividend growth rate of 11.29%, a 5-year dividend growth rate of 17.25%, and a very sustainable payout ratio at just 14.12%. Now, at the time of recording, Jacobs Solutions was actually trading 11.42% off of their 52-week high. They have an ex-dividend date of October 25th with a payout date of November 22nd. And looking here at this chart, it'll tell you the returns of this stock versus the S&P 500 over a 10-year time frame while only reinvesting your dividends. You can see that Jacobs Solutions would have turned that $10,000 investment into $38,273.76, which outperforms the S&P 500 by $1,350.62. Up next on this week's list is Graco, stock ticker GGG. Including today's video, this is now the third time I've mentioned this stock right here on the channel, and if you go all the way back to the very first time I spoke about it on July 8th of 2022, this one is underperforming the S&P 500, but I want to show you the numbers behind why I like this stock long term. Graco is a quarterly payer in the industrial sector, paying $1.02 per share per year with a forward dividend yield of 1.18%. Graco has been paying and growing their dividend over the past 27 years. They have a 3-year dividend growth rate of 10.69%, a 5-year dividend growth rate of 10.31%, and a payout ratio of 32.04%. Now, at the time of recording, Graco was trading 8.94% off of their 52-week high. They have an ex-dividend date of October 21st with a payout date of November 6th. And looking at this chart, you can see that Graco would have turned a $10,000 investment into $43,715.46, which outperforms the S&P 500 by $6,792.32. Sadly, there weren't enough stocks to give me a full list of 5 stocks to present you guys this week, so we are already halfway through this week's video. With that being said, remember to leave a like on this video if you guys are enjoying the content, and I want to hear from you guys at the end of the video. Let me know what you guys thought of all the stocks I mentioned in today's video in the comments down below, but now let's get to the rest of the list. Up next on this week's list is Caterpillar, stock ticker CAT. Including today's video, this is now the third time I've mentioned this stock right here on the channel, and if you go all the way back to the first time I spoke about it on July 14th of 2023, Caterpillar has outperformed the S&P 500, so I want to show you the numbers behind this stock. Caterpillar is a quarterly payer in the industrial sector, paying $5.64 per share per year with a forward dividend yield of 1.4%. Caterpillar has been paying and growing their dividend over the last 31 years. They have a 3-year dividend growth rate of 16.97%, a 5-year dividend growth rate of 13.24%, and a payout ratio of 23.77%. Now, at the time of recording, Caterpillar was trading pretty close to their 52-week high at just 0.39% off. They have an ex-dividend date of October 21st with a payout date of November 20th. And looking at this chart, a $10,000 investment into Caterpillar would have turned into $57,165.84, which outperforms the S&P 500 by $20,242.70. And coming in at number 1 on this week's list is a very familiar stock, and that's Lowe's, stock ticker LOW. I say this stock is very familiar because this is now the 10th time I've mentioned this stock right here on the channel, and if you go all the way back to the very first time I mentioned it on July 15th of 2022, Lowe's has barely outperformed the S&P 500 since I mentioned it, but long term, that's definitely not the case. Lowe's is a quarterly payer in the consumer discretionary sector, paying $4.60 per share per year with a forward dividend yield of 1.67%. Lowe's has been paying and growing their dividend for the past 62 years, and they still have a 3-year dividend dividend growth rate of 19.62%, a 5-year dividend growth rate of 17.47%, and a payout ratio at just 36.45%. Now, at the time of recording, Lowe's was only trading 0.84% off of their 52-week high. They have an ex-dividend date of October 23rd with a payout date of November 6th. And like I said, looking at this chart, you can see that over the past 10 years, Lowe's would have turned $10,000 into $62,831.76, which outperforms the S&P 500 by $25,908.62. With that being said, if you made it here to the end of the video, but you're watching it on or after October 21st of 2024, do yourself a favor and make sure you have that subscribe button clicked.
Or what?
Failing to do so could result in missing the ex-dividend date, which means you just missed out on those dividends.
What's wrong with that?
That might not sound too bad until you realize all of these stocks are quarterly payers, which means you now need to wait 3 long months before you get your first dividend from any of these companies, and we all know
Ain't nobody got time for that.
Before you go, don't forget to use that comment section down below to let me know what you guys thought of this week's list. And while you're too late to get the next dividend, if you want to see the companies that made last week's list, make sure you check that out right here. But until next time, see you.